have been in the real estate investing space for any amount of time, even if you're just getting in and starting to do some research, you have heard a ton of terms thrown around on how to calculate what a good investment is. Today, I want to dive into exactly what those strategies are, what they mean, and let you make a decision on which one of those you want to use to evaluate a good deal going forward. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we dive into today's video, make sure that you hit that like button, leave us a comment below, and be sure to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9-to-5, gain financial freedom, and grow your wealth through real estate. Let's dive in. So what is the best way to evaluate whether a deal is good or not? We're talking long-term, short-term, mid-term, however you want with a rental property. How should you evaluate that and look at numbers? Everybody uses something different, and I want to explain what some of those are so you know what you're talking about and you can decide for yourself exactly which one to use so that you can evaluate your deals going forward. The first one we will look at is cash on cash. This means it's a breakdown of how much you actually invested in the property up front and what it's making on an annual basis. So let's keep the numbers simple. Maybe it's not totally realistic for you, but let's say you invested $100,000 into that property and annually it is making $10,000 in income. That gives you a 10% cash on cash return. That means you're making 10% of your money every single year. And so this would go more along the lines of what you were making if you made a stock investment, you're getting a 7% annual return, something like that. It really helps you evaluate where you're getting that investment on your money and if that ratio is high enough to be better than locking it up in a 10-year treasury or whatever those things might be, stocks, bonds, things like that. So it could be a good tool to help you decide if it's a great investment versus other forms of investing. Just a side note here, a lot of people look for a 10% or greater cash on cash return to evaluate their deals. So calculate those numbers. The closer you can get to 10 or beyond, the better for you. In this market, it's getting a little bit tight to get to that 10% number, but again, it just totally depends on where you find that deal and how you make it happen. Method number 2 is cap rate or capitalization rate. And this basically takes into account the current market value of the property and the net operating income, and you get a percentage based off of that. So you're gonna take the value of the property, let's say it's $1 million and the net operating income is $100,000. That gives you X for your cap rate. And so this allows you to evaluate the potential return on investment for a property. So it's going to allow you to run those numbers and see kind of overall what that will look like. So we see this a lot in commercial investing, residential investing. We're seeing a lot of this cap rate come through as well. So people are typically looking for a higher cap rate that's going to show them greater potential for some income on that net operating income. Side note on cap rate, what people are looking for typically here is a cap rate of 5% or greater. Obviously, the higher number, the better for you there, but at a minimum, most people are looking for about 5% on the cap rate. Last ratio we are gonna look at that people evaluate is called rent to value ratio. This takes the monthly total rents for a property, whether that's single family or multifamily, what you're getting in that total monthly rent, and dividing it by the actual current value of the property. This gives you a rent to value ratio. And typically this number gives you a good idea of how much is being invested in that property and what those returns are. Most people here, as a side note, are looking for over 1% on the rent to value ratio. That's a look at 3 of the most common value ratios that people look at when determining whether an investment is a good investment or not. Which one is the best totally depends on you. I think they all have their own weaknesses and strengths as well. Cash on cash allows you to compare to other investments. Cap rate allows you to compare really well to other properties as well as the rent to value ratio. So they're all really good in their own way, but they all fall short in some ways. Overall, you just want to run the numbers, make sure it makes sense. A lot of times I just really look at the deal. Is it a good deal? Does it have good cash flow? I still run those ratios just to see where they are. But a lot of times, if I'm being honest, some of these can just be some bragging points that people use to say, hey, here's what I got for a cap rate. What do you have? In the end, it really just matters about what you're getting as far as that cash flow. Are you accomplishing your goals? Because your goals could be completely different, and a 5% cap rate might not mean much to you if you're just making $500 a month off the deal and that's all you care about because you didn't put a whole lot into it. So At the end of the day, you gotta find the value method that works best for you to evaluate a deal. And sometimes it just is going, is it getting you closer to your own personal goals? Don't get tripped up on these. Don't pass up good deals just because you're 0.1% away from the ideal cap rate and what would somebody on the chat forum say about that. Don't worry about those things. Use them to be smart about your deals, but jump into a good deal if it's a good deal. I hope you enjoyed today's video. As always, make sure that you hit that like button. Leave us a comment below. Tell me which one your favorite is, or maybe I didn't mention what you use. We'd love to hear about it below. And be sure to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow your wealth through real estate. We'll see you next time.